Okay, something truly wild is happening right now in the world of metals. We're not just talking about one market getting hot. We're talking about several key markets all surging at the exact same time, and with incredible force. This is a rally so powerful it's got everyone's attention. So, what on earth is behind this explosive rise? Let's dig in.
Just look at these charts. Seriously. On the left, you've got copper, and on the right, silver. What you're seeing isn't some nice steady climb. No, this is a near vertical launch. A parabolic move like this, happening across different metals all at once, that is not normal. And it's got everyone from miners to Wall Street investors asking one simple question.
And it doesn't stop there. Even gold, the traditional king of safe havens, has been on an absolute tear. It just rocketed past the $5,000 per troy ounce mark. That's a huge psychological number. A massive surge in demand has sent its price into territory that, frankly, very few people ever thought we'd see.
So yeah, what is going on? That is the big question we're going to unpack right now. What are these powerful forces that are driving this massive, simultaneous rally across the metals market? Let's break it down piece by piece, starting with the one metal they call the canary in the coal mine for the global economy: copper. All right, first up, copper. It's often called an economic bellwether because its price can give us a pretty good idea of where the entire economy is heading. In fact, traders have this nickname for it, Dr. Copper, because it supposedly has a PhD in economics. It's used in everything: construction, electronics, you name it. So it really is a key indicator of global health. And right now, the doctor is telling us one heck of a story. And this is where it gets really interesting. This chart from UBS lays out the core issue with perfect clarity. See those red bars? That's demand growth. The gray bars? That's supply. Now look at what's forecast for 2025 and 2026. Demand is expected to just blow past supply, creating this huge deficit. The bottom line is simple. The world wants way more copper than it can get its hands on. So, why the big squeeze? Well, it's not just one thing. It's a whole mess of problems at the source. In Chile, the world's biggest producer, the quality of the ore is declining. That means they have to dig up way more rock to get the same amount of copper. In Peru, production is basically hitting a wall. And on top of that, you've got major mining companies like Teck Resources and Antofagasta saying, hey, don't expect much growth from us. The end result? A serious chokehold on the entire supply chain. Of course, you can't have a conversation about copper without talking about the elephant in the room: China. They're the world's biggest consumer, so what happens there sends ripples everywhere. And right now, it's kind of a paradox. On one hand, the government is trying to boost domestic demand, which should be great for copper. But on the other hand, these sky-high prices are actually scaring off buyers. Imports have dropped quite a bit. It's this weird push and pull that's keeping the market on its toes. And one more thing. It's not just factories buying all this copper. A flood of money from investors have poured into the market, all betting that prices will keep going up. It's like adding rocket fuel to an already raging fire. But that's also the risk. As UBS points out here, all this speculation is exactly why they're telling people to be cautious in the short term, even if the long-term story looks solid. So that's copper, a story all about industrial demand versus a tight supply. But what happens when you sprinkle in a big dose of global economic fear? Well, that's where gold and silver enter the picture. The narrative totally shifts here, from the factory floor to the trading floor. We are witnessing a classic rush to safety, but on a scale that is anything but ordinary. So why is everybody suddenly piling into gold? Well, it's pretty much a perfect storm of global anxiety. You've got rising geopolitical tensions making investors nervous. You have serious concerns about Japan's economy and its bond market. Then there's this huge structural shift. Central banks in emerging markets are buying up gold like crazy to diversify their holdings. And to top it all off, you have investors betting that the US Federal Reserve is about to start easing interest rates. It's a powerful cocktail for price explosion. But look, if you think gold's rise was dramatic, just wait till you hear about silver. In 2025 alone, its price surged a mind-boggling 138%. 138. And that crazy momentum has just kept on rolling into 2026, all thanks to a very specific, very unusual market event. To really get why silver went ballistic, we have to talk about something called the London liquidity squeeze. Now, I know it sounds technical and kind of boring, but trust me, it's the key to this whole wild story. So what exactly is it? Okay, let's break this down. Think of it like a game of musical chairs. According to Goldman Sachs, there was a lot of talk about potential US tariffs. So companies got spooked and started physically moving tons of silver bars out of the big vaults in London and shipping them over to the US. This meant the number of chairs, or the amount of available silver, in the key London market suddenly shrank. So when a wave of investor demand hit, it was a mad scramble for the few chairs left. And that's what caused prices to spike so violently. It's a textbook example of what happens when physical supply just vanishes. The rally has been so insane that analysts at UBS are even comparing it to the crazy manias we've all seen in the crypto world. And you can see why. It helps you grasp the sheer speed of this move. But, and this is crucial, they're quick to warn everyone that the comparison is flawed. Why? Because unlike crypto, silver has massive industrial demand. It's in your phone, it's in solar panels, it has a real-world, fundamental value that gives it a much stronger floor.
Whew, so after all of that chaos and all these historic moves, the billion-dollar question is pretty obvious. Where do we go from here? We've seen the frenzy. Now let's see what the experts think is on the horizon.
All right, here are the numbers. These are the end-of-year 2026 price targets from the big analyst reports. UBS sees copper hitting a massive $14,000 per metric ton. Goldman Sachs is forecasting gold climbing to an impressive $5,400 per troy ounce. And for silver, UBS is targeting $85 an ounce, which is really interesting because that's actually below where it's been trading, which hints that they think things have gotten a little too hot. So if you boil it all down, the consensus from the experts seems to be this: be careful in the short term, but optimistic in the long term. These rallies have been so fast and so furious that a cool down or even a pullback wouldn't be a surprise. But the fundamental engines driving all this, the supply problems in copper and the global uncertainty fueling gold and silver, well, those engines are still running at full speed.
So you might be sitting there thinking, okay, this is interesting, but I'm not a commodities trader, so why should I care? And that's a fair question. The answer is simple. These prices don't exist in some financial bubble. They have very real consequences that end up affecting all of us.
Yeah, these soaring prices are way more than just numbers on a screen. They're a report card on the health of the global economy, they're a warning light about the stability of our supply chains, they're a barometer for how much confidence or fear investors are feeling, and they directly hit us in the real world. For example, when silver prices go through the roof, it makes key things like solar panels more expensive, which directly impacts the cost of the green energy transition we're all counting on.
And all of this leaves us with the ultimate question, the one that everyone is trying to figure out. Are we witnessing a historic, fundamentally driven rally that's here to stay for the long haul? Or is this a giant speculative bubble, pumped up by fear and hype that's just waiting to burst? Right now, the evidence points in both directions, and the answer is going to have a huge impact on all of our futures.